You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right, hi everyone, and welcome to the currency call presented by Forex Trading Asia. And hello to all the people watching the live stream here, thanks to the LCMS Trading Club members as well. And if you do want to get in on the LCMS Traders Club, just make sure you visit the website in the bottom of the video, the Jindal Thai website. And welcome as well to all the people that are new. We've had a few people come in as well recently, so welcome. And hello to everyone watching it on YouTube a little bit later, and a quick introduction to the call as well. So we are on episode 436, the 8th of December, and we present the currency call every Monday to Friday at 11 a.m. GMT+8. And the currencies we analyze are as follows. So Monday, we do the Aussie and Kiwi. Tuesday, the Euro. Wednesday, we've got the pound. Thursday, yen and gold. And then Fridays, we've got CAD and crypto. And in the currency call, we'll present the market economic updates, the key support and resistance levels, trade ideas, and we'll also go into the breaking news as well, such as what will happen a little bit later this morning with Kim Hong as well, just going through the RBA release that happened yesterday. And in the currency call, we aim this to be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, the potential trade ideas, and we'll also highlight potential targets and risks. A disclaimer here as well, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering in any trades, and always feel free to ask questions as well from us, whether it's here or in the LCMS Traders Club as well. So we do have Kim Hong here, currency strategist at LCMS Traders, and he'll just be going through the details of the RBA interest rate decision and the statement as well from yesterday. So over to you now, Gimmy.
All right. Thank you, Scotty. Happy Wednesday, everyone. Okay. So yesterday we saw the RBA, announce their monetary policy decision during the currency call. So apparently, I would say it's pretty much expected, that no change in the monetary policy was being made. Interest rate were held at 0.1%. Quantitative easing continues at 4 billion Australian dollars per week, until at least February 2022. Hence, we see little movement, with respect to the Australian dollar. However, there are a couple of points that I would like to bring out. So what you're looking at right now. Wait, am I stuck again? I think I am. Okay, let me just continue. What you're looking at right now is the Reserve Bank of Australia's monetary policy statement. That was released yesterday. So as you can see, great, I'm back. As you can see, where is it? So first thing that we want to take note of is the central bank's view on the recently discovered Omicron strain. Over here it says the emergence of the Omicron strain is a new source of uncertainty. Bad. All right, but it is not expected. Excuse me. But it is not expected to derail the recovery, the economic recovery in Australia, and the economy is expected to return to its pre-Delta path in the first half of 2022. So somehow, the RBA, they are actually not so threatened. You don't feel threatened by this whole Omicron strain, that has been discovered recently. Although, I guess because recently I think the is it the World Health Organization? I think the director of the World Health Organization came out to say something like, as of now, with the amount of data that we have at the moment, the Omicron variant does not seem to be that bad. With just what the the organization have at the moment. So there was actually a bit of optimism being sent across the market in terms of Omicron variant. So, which is probably the reason why you guys have been seeing some strengthening in risk currencies, risk assets as well. Okay, the S&P 500, the three major indices have been, I would say, recovering. Okay, recently making a comeback, I would say. All right, so that's probably why the RBA is actually saying that yeah, it's a new source of uncertainty, but it is not expected to derail the recovery of Australia's economy, okay, of the Australian economy. So, okay, that's good, I would say, that's good. And that's the first point. Now, the second point, we will have to turn our attention to February 2022. Why is that the case? Because the current ongoing QE program will actually last, at the current pace until at least February 2022. So by then, or maybe slightly before then, we can actually expect the RBA to, to maybe revise the plan, okay, to maybe continue tapering from 4 to maybe 3 or 2 or something like that, okay. All in all, we can actually expect a change in QE, because that's what they say they're going to do, right? They're going to make amendments to it, worst come to the worst, they're just going to hold unchanged at 4. Okay, per week until as and when they decide it to be. All right. So we can actually expect something. Actually expect a change in QE during the February's meeting. Okay. So over here it says that the board will consider bond purchase program, okay, which is basically their QE. So by then, by mid-February, the RBA will hold a total of $350 billion of bonds issued by the Australian government and the states and territories, all right? With these holding support, providing support to the economy. Okay, so when it comes to making the decision, okay, of whether to carry on further tapering, okay, or to keep it unchanged, unlikely, okay, very unlikely, okay, that the RBA will be increasing QE. Okay, so we are looking at either a further cut in quantitative easing, okay, a tapering, okay, or unchanged, no change in QE. Okay, either a tapering or no tapering. That's all. All right, and increasing in QE will be like disastrous. Okay, basically it will be disastrous. So there are actually 3 conditions that the board will consider. Okay, 3 considerations. First is the actions of other central banks. Personally, I feel that this is very important. I'll come back to this point later on, all right? That's the first point, the actions of other central banks. So depending on how the other central banks, or the major ones, okay, maybe like the RBNZ, the US Federal Reserve, the Bank of Canada, so on and so forth, okay, the major central banks, depending on how they act, okay, the Reserve Bank of Australia may actually follow suit or may not follow suit, all right? Then the second consideration is how the Australian bond market is functioning. Okay, obviously recently they just dropped the YCC, okay, the yield curve control, and that is actually quite a positive move, I would say. Okay, a more what's the term again? Hawkish move. Okay, coming from the RBA. All right, so the bond market will have a strong impact on how the RBA will decide its next move. All right. And most importantly, the actual and expected progress towards the goal of full employment and inflation consistent with the target. Like what the central bank has been reiterating, over and over again for the past, 10 or 11 months. Okay. They would need inflation to be sustainably achieved within the 2 to 3% target. Okay. Only then they can actually raise interest rates confidently. All right. And of course, similar to the Federal Reserve, employment plays a very, very, very significant role in terms of making adjustments to monetary policy as well. In this case, policy tightening, aka interest rates hike. Okay, so just now I said that the actions of other central banks will be very important. Okay, because now we will be hearing from the Federal Reserve and 2 other central banks next week. Okay, and the Federal Reserve, well, as we can actually expect the Federal Reserve to increase tapering of their QE, okay? And as we know, in this world, all right, among all central banks, okay, in this world, the US Federal Reserve, okay, the US Central Bank is probably the most important one. Okay, most important in terms of the impact that they have. All right, when they carry out any changes in their monetary policy. Okay, when they, for example, okay, when they actually cut interest rates last year, okay, due to the pandemic, okay, to an all-time low of 0.25%. Slowly you see, well, not slowly, but quickly you will see that the other major central banks follow suit as well. They all start doing big cuts like 0.5%, 0.25%, and 0.4, 0.5% as such. Okay, as such, we can see the impact that the Federal Reserve have on the other central banks. Okay, which is why if the RBA, okay, is actually dependent on the other central banks, the Federal Reserve would be the one that we have to pay attention to, because the actions that they will carry out next week, okay, during their meeting will, I would say, will pretty much determine how the RBA move during their next meeting, okay. And as of now, don't forget that the Federal Reserve has already started tapering, okay. And now the question is whether or not they will actually, faster speed up the pace of tapering, okay, and there is a good chance that they will. All right, there is a good chance that they will. And because of that, all right, if they were to actually carry out a faster tapering pace starting from January 2022 onwards, okay, then if the RBA is going to just do nothing, just going to keep everything status quo, all right, then the RBA will be falling behind. Okay, that's one thing. Falling behind is one thing. Okay, the second thing is inflation is rising, all right, and the major central banks are actually responding to this super rise in inflation strongly. Okay, they have been doing massive QE tapering. Some of them has already ended QE. All right, RBNZ, New Zealand, Bank of Canada, all right, both major central banks have already ended quantitative easing, okay, in response to the strong rise in inflation. Now, if the Australian Central Bank were to take a more defensive approach, okay, were to let monetary policy be more loose in this case, okay, and choose not to fight inflation, not to, attempt to tone down the rising inflation, okay, then, yeah, things may be a bit bad for the central bank in the next year, okay, because nobody knows when this whole supply constraint issue will end, right? And with Omicron coming in, like the RBA has already admitted themselves that this Omicron actually is a new, uncertainty, right? New rising uncertainty. So, and as of now, it's still too early to conclude that, Omicron has little impact on the global economy and things like that. The RBA would really need to act fast, okay? That's what I'm trying to say. If they choose to take a more conservative approach, a more wait and see, hold back approach, for the next meeting, then yeah, I think, yeah, they will spell trouble for the RBA, basically, all right? So actions of other central banks, and we can really pay attention because next week there are three central banks: Federal Reserve, Bank of England, and I think it's the European Central Bank. Of course, European Central Bank, we can pretty much expect no actions from them, but they have some major news to be announced, which I will be covering next week. Okay, so 2 points to focus on, or not to focus on, to pay attention to this time around coming out from the RBA for the last meeting for the year. Okay, first is that as of now, the Omicron variant seems to prove no major threat to the Australian economy. Okay, second thing is, they will be revising, they will be re-evaluating the whole QE, okay, the economic situation, and see how QE should be amended, okay, during their next meeting. So the RBA will actually be meeting again in 31st January. Okay. For some reason, I've just checked the calendar. They do not have a meeting in February. So I suspect this January 31st meeting is actually the so-called February meeting. Okay. So in January 31st, they may actually decide on whether or not to proceed with the current pace of QE or to carry out a further tapering of QE itself. Okay. And because, they got to do all these things early, right? They cannot do it just like now and then just start QE tomorrow. So with that, yeah, that's pretty much it for the RBA. Any more things I have to cover? Okay, so my personal view on Australian dollar right now. Okay, I think yesterday, yeah, was it yesterday? Yeah, yesterday. You guys probably seen some strengthening in Australian dollar and New Zealand dollar. Okay, my view on Australian dollar right now is that we can actually expect a short-term strengthening in the Australian dollar. Okay, some may actually take the whole downplaying, I would say, downplaying of the Omicron variants by the RBA as an optimism. Okay, remember they are actually expecting this Australian economy to to return to its pre-Delta path in the first half of 2022. Hence, this whole Omicron variant at the moment, okay, doesn't seem to be much of a threat to the Australian economy, which is a good thing. Okay, second thing, yeah, like I've said, they will be reevaluating the whole issue and things like that. And at least right now, they spell out three considerations, three criteria that they will be considering when making decisions as to whether or not they should hold QE unchanged at the current pace or to speed up QE tapering. Okay, so one more thing is that I think it was yesterday or the day before that the Chinese import data was released, trade balance data was released. Okay. Not too much of the figure, okay, but the point to take note is China's coal import, okay, the natural resources, okay, the natural resource coal has actually hit the highest level in 2021, okay. So for the month of November, the amount of coal that China has imported, okay, actually hit the highest level in 2021. So what this means is that now, don't forget that Australia is the largest exporter of coal to China. Okay, so if the Chinese import of coal has hit the highest level in 2021, guess who will benefit? Australia, right? So which is why this actually added more strength to the Australian dollar. Okay, it actually pushes the Australian dollar higher. Okay, because it's very positive. And I think one of our club members actually mentioned in our ECOFIN as well. Thanks for sharing the article. That the Chinese has just recently do some cut to their triple R thing. I think it's some reserve. Yeah, I can't remember what's the full term for it, but it's something reserve, okay? And it's actually quite a positive thing for the Australian dollar as well, okay? So with all these things adding in the short run, my expectation is, for Australian dollar to strengthen in the short run, okay, for the time being, okay? So with that, yeah, I just want to remind you guys that the Bank of Canada, okay, will be announcing their monetary policy decision later today, okay, at I think 2200, yeah, 2200 GMT plus 8, okay. Anything, just refer to yesterday? Yeah, yesterday's currency call when I actually give, what to pay attention to, okay, because there will be trading opportunities as well, okay. With that, do we have any questions? Yeah, I think it's Anthony Fauci, or however you pronounce it. Correct. He's the one who actually mentioned that, the Omicron variant, as of now, okay, with the data that they have, it's not that bad. Okay. Is it last February's meeting? Last February's meeting? What do you mean by last?
In reference to when you were looking at the RBA meeting schedule, but I don't think so. I think it's
meeting schedule. Okay. Next schedule is January. It's not going to be in February. And if you're referring to the in the statement, they actually said something like February and things like that. Yeah, they are actually referring to next February. So next February is when they are going to carry out a review on the Australian economy and to determine if they should, the RBA should actually remain unchanged at the QE pace or actually speed up the pace. Okay, so if no other questions, okay, good, then I'll hand it back to Scott.
All right, thanks for that, Gimme, much appreciated as well. And we'll just get into it, guys, with the US dollar index here. So we are actually seeing a little bit of a pullback currently as well. Just had the USD CAD up there. For anyone that did take that, it was a pretty nice move last night as well, just with some oil strength as well. But so we've got the US dollar, and we, again, there wasn't a lot of news out for the US dollar. Again, we've got that Friday inflation release at 9:30 in the evening, GMT plus 8. but we have seen markets just cool off a little bit in regards to the risk sentiment. We are still seeing risk on, most definitely. Just had a little scan of the Aussie session and what's going on, and we're actually seeing an over 1% increase on the ASX 200. So it's quite, telling how we've got a little bit of continuation still present here. But I will be watching just to see how we interact with that 96.00 level. And something else that I've picked up as well, and I discussed this a couple of days ago, I've got the 2-year Treasury bond yield up. And what I've got here, and I'll just zoom this in a little bit more, is, so this is the 5-year chart. And what we've seen previously, so 2018 was when we did have increases in interest rates, and we really did see some market reaction to that, to the downside. And we're just seeing, so the 2-year pretty much indicates that in the short term, markets, as we've seen right now, are actually definitely pricing in increase in interest rates a little bit sooner than expected. So we've obviously seen this flat, there's no real interest in getting into bonds, but we have seen a lift now currently, and it's definitely something worth paying attention to. We've already seen this come up a little bit more this week as well. So we are seeing risk on sentiment just with how the equities have been playing out, and the Aussie dollar and the Kiwi, but definitely it's going to be quite interesting to see how the market reacts to the inflation data release as well. I just want to quickly go to the calendar just with Forex Trading Asia as well. And so obviously yesterday there wasn't really a lot out to move markets in a sense. We had the non-farm productivity down slightly, but again, very insignificant miss there. And then, well, slightly better, but
the data got lost. The actual data got lost.
Oh, it did. Oh, I see. Pardon me. All right. So what I'll do there, guys, is I will go down to Friday, and I'll just discuss the expectations of the inflation. And sort of interesting, we are seeing a decrease expected on the CPI month on month, and then also for the core CPI month on month, increase year on year. So something to really pay attention to. And beforehand, it's pretty stagnant. Now, I mentioned this with the USD CAD with this release. USD CAD is an interesting level of support close to it. So something to pay attention to with that. But in regards to the US dollar, and I'll just quickly revert back to the chart now. Definitely the 96 is going to be something to watch for. There was news out, and I'll share it in the trading chat in the LCMS Traders Club, is that the debt ceiling, that's the 15th of December is the deadline. And there is a little bit of news out that they are really looking to resolve that. So I'll share that article in the trading floor chat as well. But 96 flat incoming. Let's see what happens into tonight's session for us in our time zone. But that's it there for now, guys. Upside still present on the US dollar. And we do have the pound analysis now with Jin, multi-million-dollar trade, Jin Dao Tai, and the news update as well. So over to you now, Jin.
Thanks for that, Scotty. So today being Wednesday, we do have the pound dollar in focus. What we are looking at for the pound dollar, quite straightforward. Good thing is that, well, apart from all the data being missing right now, on Wednesday today, we do have the Bank of Canada press conference, rate statement, and rate decision, which Kim Hong has told you about yesterday. But we do have the live trading session for Traders Club members tonight. So make sure you jump onto that. I'll be giving you some possible trade setups. I was already sharing with you the US CAD yesterday on one trade. So looks like something might be happening on the US CAD, especially being driven by the Bank of Canada's rate decision there. On Thursday, couple of news, but not big price movers. And on Friday, look at it, GDP for the UK year on year expected to go from a 6.6 to a 22.2, a big jump in terms of GDP year on year, but that's also because last year was probably a bit of a quiet time for everyone, right? Now, month on month, looking at a 0.6%. I think not a big change expected there. With all that, we're possibly going to see some upside move in the pound dollar on Friday, but that's probably going to be capped a little bit, as Scott was sharing with you. Core CPI for the US looking to go from a 4.6 to a 4.9. I'm even anticipating possibly even a 5%. But we do know that, or I'm looking at it at 4.8, 4.95, we're still going to see some US dollar strength come back into play. As I was sharing with you at the start of the week, we are looking at, with all the market movements over the last couple of weeks, we are looking at possibly a bit of a retracement period right now for this early into this week, which is what we saw. Just doing a quick recap on the Aussie dollar, we were trading that up towards the 7120 level. It has broken. I'm not looking to buy it up from this point. I'll be looking to see how it reacts to turn down or break below that level. The New Zealand dollar moving, tracking along as we expected, still looking for that reaction at 68.19. The euro dollar broke down briefly. That's a test of your discipline. Make sure that it closes strongly below that 1.1254 level before looking to sell. Hasn't done that, breaking back up. I'm still looking for it to test that 1.1346 before looking to trade it back down towards support, which comes to the euro pound. We drew that line right across and said that we'll be looking to sell only if it breaks below that support or that level, that price level. It came very close once, twice, didn't break and bounced back up. This again highlights that key importance of having specific price levels, on understanding your support levels and having that discipline to keep to those price levels and trigger levels. So what could we expect here on the pound dollar? Again, look at that price level of 1.3222. It's hit once last week, twice last week, just again this week, and it's held 3 times already. So what I'm looking for the pound dollar is for it to bounce off this support and possibly back up towards that 1.3365 resistance level. Same as what we talked about last week, where I said it was going to test that level. It did that test there before coming down towards the support. What I'm looking for again in this scenario would be for it to come up, test that resistance. So you could even be looking for a buying opportunity at about 1.3260, a 40 pip stop loss for an 80 pip take profit level. You're looking at 1:2 risk reward ratio towards that upside, towards that resistance level. But what to do from that point onwards, I think with the anticipation that the dollar strength will come back into play, what you could be looking for is to sell it back down again from that 13365 back towards the 13222. Again, about 13346, 30 pip stop loss, almost 120 pip take profit level, or 1:4 risk reward ratio towards that downside. What you'll notice here also is the pattern with how the pound dollar has always been moving. If I zoom out a little bit, you see that range. It always moves in a bit of a range before it breaks. It moves in a bit of a range here before it breaks towards the upside or towards the downside. We're looking to trade within this range, a healthy range to be trading within at this point. So if the pound dollar is likely to push up towards that 13365 resistance, what we could anticipate for the euro pound is possibly for it to track higher now, being pulled up by the euro dollar to track higher towards 85.38, but then after that looking for it to track back down again. So I would say do nothing with the euro pound at this point. Wait for it to track higher, wait for it to repeat what happened early this week or late last week, react to that resistance level and look to sell it back down again. So quite short and sharp on the pound dollar and the euro pound, what you should also be looking forward to is tonight's live trading session, where I'll be going through with you all the 9 currency pairs, and in particular the US CAD, as we look into the Bank of Canada's rate position. With that, back to you, Scotty.
All right, thanks for that, Jin. I'm just about to share the trade ideas as well, everyone, in the Euro and Pound discussion thread within the LCMS Traders Club. And remember, guys, if you're watching this delayed, you're looking to get some more insights into markets. We do operate 24/7 within the chat as well, so hop on in. We've got a lot of different insights, a lot of different backgrounds.
Almost 24/7.
Almost
Someone
24/7.
might be awake, but we'll see. Almost 24/7.
There's someone in there, maybe not from the team, but I think M Leader is he's in there pretty frequently during the US session, so keeps everyone busy. All right, guys, but thank you for watching, and I hope to see everyone tonight with the 8 p.m. live trading call. Enjoy the rest of your day.